just from your point of view, really, broad brush, how do you see the landscape at the moment? Again, I've seen a degree of uncertainty in your forward-looking statements already this morning.
Look, we're very comfortable with the results that we're publishing this morning. A strong profit as we go through, and I think underpinned by a strong impairment release. And if anything, that's one of the best measures of how we view the economic landscape at the moment. Definitely improvements in terms of what we're seeing. I mean, our economic release as a result of GDP growth forecast of 7.3%. So a very strong position, all kind of coming together to make sure that we've got a capital of 18.2%, same as at Q1. So after a lot of different capital management actions. So really, we're feeling sort of cautiously optimistic, I think, is how we describe ourselves this morning.
Oh, and I'm pleased to hear that. Katie, I'm very boring, so I'm going to ask you a question I've no doubt asked you previously in the past. Is your profitability as a net interest margin compared with some of your peers elsewhere in the United Kingdom? You as the CFO are working really hard to improve that as well. Why does it remain stubbornly under 2%?
Well, I think there's always an element of who calculates what and how. So if you look at our NIM, when you look at it excluding the amount of liquid assets we've got, so all of those deposits that have come in from our customers, what you actually see is at 2.4%. But what we do in the headline number that we talk about is that we include all of those numbers. So actually that's why it's at 1.6%. So we're comfortable. It's a good print, helped this quarter by strong mortgage margins. And there's a little bit of a positive one-off there as a result of some complexities of the tax changes as well. But comfortable where that is. And if you go on a like-for-like basis, we're at 2.4. So actually pretty much in the round with some of the other banks as well.
Yeah, Katie, just on that mortgage market, do you think we've had the best of it now? I think we just saw the first print suggesting that maybe the property market is beginning to slow a little from these very strong gains we've seen on the back of the Chancellor's support. That, of course, has now been removed. What's your expectation?
What we'd expect to happen is that there'll be a small kind of tail off because there's been huge activity. I mean, June, I think, is one of the strongest months on record in terms of people closing mortgage deals. But we feel that it will continue to grow steadily. And if we look at the economics we've got in our results today, that is for sort of steady kind of growth up from here. We think the volumes will come down a little bit, but we're comfortable that that's still a good market for us and for the rest of the banking sector as well.